Today, crypto platform Abra settles with the SEC over charges related to the alleged unregistered offers and sales of crypto asset securities. A report out today shows that Bitcoin's rally helped create more than 84,000 new crypto millionaires in a year. And Juan of Bitwise breaks down his new research revealing that long-term investors may be better off putting their money into Bitcoin instead of gold when stocks sell off. By noon Eastern, Bitcoin dropped nearly 3%, trading back down to the $61,000 level. Ether fell more sharply, down 5.3% and trading at $2,578, while Polygon's Matic token sank nearly 4% to 49 cents. While spot Bitcoin ETFs were a boon for crypto markets earlier this year, leading to those all-time highs we saw in March, that doesn't seem to be the case thus far with the launch of spot Ether ETFs. A report from JP Morgan out yesterday found that last week's spot Ether ETF volumes lagged the group's running average since launch by about half. About $216 million in volume traded in spot Ether ETFs on Friday, the best day of the week, compared to a running average of $434 million per day since launch. But big-time exchanges are still looking to cash in on the growing interest in crypto. Nasdaq just announced this morning it was looking to launch a Bitcoin index option. Okay, let's check out some more crypto headlines. Crypto platform Abra agreed to a settlement with the SEC for allegedly failing to register the offers and sales of its retail crypto asset lending product, Abra Earn. Yesterday, the SEC also charged Abra with operating as an unregistered investment company for at least 2 years. The associate director of the agency's Division of Enforcement said, quote, "As alleged, Abra sold nearly $500 million of securities to U.S. investors without complying with registration laws designed to ensure that investors have sufficient, accurate information to make informed decisions before they invest." She went on to say that to compound the potential harm to investors, Abra allegedly sold its own securities while skirting applicable Investment Company Act provisions that provide a number of important protections to investors, including minimizing conflicts of interest. Now, an Abra spokesperson told us that without admission of wrongdoing, Plutus Lending, a subsidiary of Abra, agreed to settle and continue to comply with securities laws. The spokesperson added that no consumers were harmed at all by the settlement or wind down of Abra Earn, and that all assets for U.S. Earn customers, including accrued interest, were transferred to their Abra trade accounts in 2023. According to the SEC, to settle the charges, Abra consented to an injunction prohibiting the firm from violating the registration provisions of the Securities Act and the Investment Company Act, and requiring it to pay civil penalties in amounts to be determined by the court. Next, a Nigerian judge will hear the case against Binance and its 2 detained executives a month ahead of schedule. That's according to Reuters, which reported that the next hearing was scheduled for October 11th, but was moved to next week, September 2nd to be exact. Binance faces allegations in Nigeria of money laundering and tax evasion. The country detained 2 of the company's executives, U.S. citizen Tigran Gambarian and British-Kenyan Nadeem Anjarwalla, back in February, though Anjarwalla escaped Nigerian custody back in March. Binance CEO Richard Tang said in an update today that Gambarian's health has deteriorated to the point where he can't walk, and called for the U.S. government to take action to bring him home. Tang also denied some of the claims Nigeria brought against Binance in his statement, including the company's alleged responsibility for devaluing Nigeria's local currency. Last, a new report reveals that the population of crypto millionaires in the world surged 95% over the past year as Bitcoin ETFs and other crypto assets climbed. According to this report from New World Wealth and Henley & Partners, there are now 172,300 people around the globe holding more than $1 million in crypto assets. That's up from 88,200 last year. The report also reveals that the number of pure Bitcoin millionaires more than doubled to 85,400. The surge reflects the rapid growth of Bitcoin ETFs, which now have more than $50 billion in assets since launching in January and have touched off a wave of institutional participation. All right, for our main story, research out this month from Bitwise Asset Management suggests that long-term investors might be better off flocking to Bitcoin rather than gold when stocks sell off. I spoke with the author, Juan about his research and the 12-month outlook for Bitcoin. You put out a note a couple of weeks ago arguing that history suggests to buy Bitcoin when there is blood on the streets. Of course, we saw that crypto sell off in early August. You point to that in your research, noting that Bitcoin nosedived more than 14.5% between August 2nd and 5th. You wrote that the sharp pullback sparked questions, including whether Bitcoin is in fact a hedge asset, and so you decided to dig into the historical data. Can you take us through the data you analyzed, how you went about it, and what conclusion you reached? What was your key takeaway?
Absolutely. From that volatile episode, what I did was I decided to look at every instance during the past 10 years when the S&P 500 dropped by 2% or more in a day, and then I compared it to the performance of both Bitcoin and gold over the following year. And what I found was that on average, gold returned 8% over those next 12 months, while Bitcoin returned 190%. So my takeaway for investors is that history tells you that the next time the stock market sells off, you're better off buying Bitcoin as a long-term portfolio hedge instead of gold.
Interesting. Now, your research points to the, quote, bad news for Bitcoin, which is that the data shows that Bitcoin is an unreliable short-term hedge. You wrote that Bitcoin's one-day return seems to have no relationship to what's happening in the stock market at all. Were you surprised by that, and why do you think that is?
Yeah, I wasn't too surprised. What I found was that sometimes Bitcoin goes up when the stock market goes down. Sometimes it goes sideways. Sometimes it falls much more than the market. And it doesn't surprise me because the drivers of Bitcoin are different than the drivers of the stock market, which is why Bitcoin tends to have a low correlation to the stock market and is a great asset as a portfolio diversifier. Now, if you're looking for your perfect hedge on a short-term one-day basis, then Bitcoin is not great in that sense because sometimes it helps, but sometimes it doesn't. But what I did find is that, and the reality is that most investors care about long-term performance and invest for the long term. And on a longer-term basis, it does turn out that Bitcoin has historically been a much better performer than gold for your portfolio over the long term after market shocks.
Yeah, and expanding on that, you wrote that in the year after a 2% or greater pullback in stocks, gold substantially underperformed the bounce in stocks, averaging a nearly 8% return. But Bitcoin, quote, more than makes up for its volatility with a whopping average return of nearly 190%. Were you surprised by that discovery? What does that signal to you?
Well, that shows me that gold is a mature asset and as a result of that, doesn't have that much long-term appreciation, whereas Bitcoin is still a nascent asset in its early adoption phase of institutional and global wider consumer adoption. And so it has strong store of value properties, limited supply, and decreasing new issuance of Bitcoin. And so over the long term, it should perform as a great store of value. And I think that coupled with its growth properties, because it's an early adopted asset that is growing in acceptance around the world, I think those two characteristics are really powerful and make it a great long-term store of value for your wealth.
Now, in your research, you also write that the 12-month outlook for Bitcoin is one of the most bullish you've seen, considering several catalysts, including spot Bitcoin ETF inflows and the expectation of Fed rate cuts. Can you take us through those catalysts and others that could potentially propel Bitcoin's price?
Yes. Well, the launch of the Bitcoin ETFs this year has been what we call the IPO moment for Bitcoin, and it's ushering in institutional investors into Bitcoin. And what we've seen is great adoption thus far. We've seen since launch almost 18 billion in net inflows, which has been a record and the best performing category of ETF launches in history. And we've seen now two sets of 13F filing seasons of institutional managers and their holdings. And what we saw in this second filing compared to the first one is that the total number of institutional investors holding Bitcoin ETFs rose 14% quarter over quarter from 965 firms to 1,100. And their share of total AUM of Bitcoin ETFs rose as well from 18% to 21%. So altogether, institutional investors closed the quarter holding more than 11 billion in Bitcoin ETFs. So we see institutional adoption rising, more assets flowing into the ETFs, and that is great for the asset class. It shows more adoption by institutions, and I think it will continue to drive the price higher. And then we're also seeing now, we saw this past weekend, Fed Chair Jerome Powell, in his statement, he said that the time has come for policy to adjust. And I think that was a pivotal statement. And I think that marks the end of the rates being higher for longer era and has kickstarted the rate cutting cycle of 2024 and 2025. You now see CME futures pricing in a 100% chance of a rate cut in September and 200 basis points of cuts over the next year. And as we've seen, rate cuts are historically good for risky assets like Bitcoin because they lower the discount rate that is used to calculate the long-term value of assets, and that gives prices a boost. But more than that, they also inject animal spirits into the markets. So my sense is that Powell's statement fired the starting gun for a new bull market in crypto. And I think that will be very positive.
And it certainly will be very interesting to see if your forecast comes to fruition. Your note does, however, warn that we are likely not out of the woods quite yet, as investors are still on edge from market swings and the uncertainty of the U.S. presidential election. On top of that, there are signs of a slowing global economy and escalating tensions in the Middle East. So with all those factors in the mix, do you think Bitcoin can surpass that all-time high above $73,000 reached back in March in the coming months? What's your timeline?
I do think so. I think we have very positive catalysts over the medium and long term. However, as you mentioned, I think we do have to clear a few things in the short term before prices move meaningfully higher. I think the market needs to finish clearing the sales of Bitcoin from Mt. Gox and the U.S. government. We need to see what enforcement actions may come as we approach the end of the SEC's fiscal year in September. As you mentioned, politics has been a big topic, and we need to have better clarity on what the Harris campaign will take toward crypto, and then what the outcome of the U.S. election will be. At this point, Trump winning is clearly more favorable for the industry, and so all things equal, higher odds of him winning or moving up in the polls will be supportive of crypto prices as we get closer to the election. And then lastly, we need to see those Fed rate cuts take effect. But I do think a new era has begun, and it will gain momentum as we push through the election and those other clouds of uncertainty hanging over the market. But I think once we're on the other side, I think we'll see Bitcoin at new all-time highs of 100,000 or higher, and that could happen as soon as the end of this year or later into 2025, depending on how these different catalysts play out and how quickly we move through them.
Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.